Somewhere right now, a person is filling out a form for their financial advisor, and they are ticking the box that says, "I am comfortable with high risk. I could handle a 20% drop without panicking." And the advisor has to believe them because there is no way to check. Here is the uncomfortable truth of this whole episode. That person is almost certainly lying, not to the advisor, to themselves. And so probably are you. Welcome to MarketRacoon, your financial learning channel. Today, the one investor you can never quite read, you. You have probably filled one of these out yourself. The risk questionnaire, a little slider, a few multiple choice questions. How would you feel if your portfolio dropped 20% in a single month, and you dragged the slider calmly over your morning coffee, your account perfectly intact, and you answer, "Fine, I would just hold." It feels like an honest answer. It is not even close to one. Because every one of those answers is self-reported. It is not a measurement of how you behave. It is a guess about a stranger, a future version of you that you have never actually met. You are calmly predicting how a frightened person will act in an emergency that has not happened yet. And calm, comfortable, coffee in hand you, is a genuinely terrible witness. Back in episode 1, we said something that annoyed a few people. Risk is not the same thing as volatility. The market moving up and down is not, by itself, the danger. So then what is the real danger? It has been hiding in plain sight this entire time. It was never the market. It is you, at exactly the wrong moment. And here is the moment. The market is down 30%. Every headline is screaming. Your account, the one you swore you were fine watching fall, is a sea of red every single time you open the app. In one night, quietly, alone, you do the single most expensive thing an investor can ever do. You sell, at the bottom, just to make the feeling stop. And this is the gap nobody warns you about. A 20% loss on a questionnaire is a number. A 20% loss in real life is a physical thing. It is the pit in your stomach when the mortgage is due. It is your partner asking, across the dinner table, whether we are going to be okay. Paper losses and real losses live in two completely different bodies. Think of it like a fire drill. In a drill, everyone strolls to the exit, calm, chatting, confident. It proves almost nothing, because the day there is real smoke in the hallway, that calm, orderly version of you is nowhere to be found. What you say you would do, and what you actually do when it is real, are simply two different people. The form only ever gets to meet the first one. And it gets worse, because that brave version of you is not even a fixed setting. Your tolerance for loss is not a fact you discover once and keep forever. It is a number that quietly moves your whole life, resetting every single time your circumstances do. The you who can shrug off a crash today might be a completely different investor by this time next year. Because life keeps rewriting it underneath you. A new baby arrives, and suddenly that volatile portfolio is the college fund. A mortgage, and the monthly payment does not care how the market feels. A marriage, a layoff, an aging parent who needs help, a health scare. Each one silently reaches into your risk tolerance and turns the dial down, usually at the exact moment you least expect it. Picture the same person twice. At 25, single, no dependents, a crash is almost thrilling. Stocks on sale, decades to recover, bring it on. Now hand that exact same person a newborn and a mortgage, and an identical crash feels like a direct threat to their family. Same portfolio, same market, a completely different human being holding it, with completely different nerves. And here's the part the questionnaire cannot even imagine, because it only ever tests you alone. In real life, you are never alone. During a crash, a partner who cannot sleep can move your hand. A parent saying, "Sell everything. You work too hard for this." A group chat in full panic. A coworker bragging he already cashed out weeks ago. Your risk tolerance is not really yours. It belongs to your whole dinner table. So quick quiz, and I genuinely want your honest answer in the comments. Which of these would actually move your hand first? A market crashing 30% overnight, a brand new baby arriving, or the people you love most at the kitchen table quietly telling you to sell? Be honest with yourself. most of us confidently pick the wrong one about ourselves. Now you can finally see why a good financial advisor has an almost impossible job. Their most valuable skill was never picking stocks. It is talking a terrified human off a ledge at the precise bottom of a crash. But they can only ever act on what you told them, calmly, months earlier. They are quietly managing a whole household's nerve, and in a real panic, the loudest, most frightened voice in the room usually wins. So the real product a good advisor sells is not returns. It is a steady hand on your shoulder that says, "We planned for exactly this day, do not sell." That one sentence, delivered at the right moment, is worth more than any hot stock tip. And it is the single thing a slider on a form can never, ever do for you. And we can actually measure the damage this does. Study after study keeps finding the same quiet tragedy. The average investor earns noticeably less than the very funds they are invested in, often by a few percent a year, every year. Not because the funds failed them, because the humans holding them got scared, bought high, and sold low. Compounded over a lifetime, that gap is staggering. And that gap has a name we do not like to say out loud. That gap is your real risk tolerance. Not the number you ticked on the form, the behavior, the panic, the selling. Your true tolerance for loss was never what you claimed it was, calmly, in advance. It is simply what you actually did, the last time it really hurt. So here is the honest turn, and it is oddly freeing once it lands. You cannot know your future self. You cannot know who will be in the room, or what life will have thrown at you on the very worst day. So stop trying to guess it perfectly, because you will fail. The goal was never to predict the frightened version of you. It is to build a system that quietly survives them. And the good system is boring on purpose, because boring is what survives a panic. Automate your investing, so the scared version of you never has to press a single button. Check the balance far less often. Keep a real cash buffer, so a job loss or an emergency never forces you to sell at the worst possible moment. And this one matters most. Agree the plan with your partner while everyone is calm, so the storm arrives to a decision already made. So here is your portable rule for today. Do not ask how much you can afford to lose. That is a fantasy, answered by a calm stranger who will not be there on the day. Ask instead, what would have to change in my life before I would sell? Write it down, decide it together, and plan for that, before the storm, not in the middle of it. Next time, we follow the strangest new player in all of global finance. A so-called crypto coin that is not betting against the dollar at all. In fact, it might quietly be the single most powerful weapon the dollar has ever had, and you are the one carrying it. If this made you a little less certain that you know yourself, good. That is the first honest step. Subscribe, ring the bell, one money illusion demolished every single week, and tell me down in the comments. What is your sell everything trigger? Be brave. See you next time.